Today, FactSet, financial data and analytics powered by tomorrow. Boo!
Seriously.
I have my scary duck tie
Yeah,
on
you
today.
do.
I wear this every Halloween. It's 1 o'clock on the East Coast. Swizz with ducks. Dan Nathan without.
Man.
Carter Braxton Worth will be joining us for Market Call.
Yeah.
There's a lot going on today.
You know, it's funny. I just recorded a conversation with Cameron Dawson.
Dig her.
She's the best CIO of New Edge Wealth. And we were talking about when's the last time we saw a NASDAQ down more than 2.25% midday. You have to go back to, I think, that first week in August, guy. We didn't have too many of those going on. We have an
August
S&P.
5th, probably, right?
Yeah, so we're kind of climbing back a little bit off the lows in the S&P. We're down, 1.5%. The NASDAQ composites down 2.15%.
Remember, it is month end, so
Yes.
strange things can happen for the end of the day. So keep that in mind. But let's go. I mentioned Carter, right?
Yes, he's coming.
Historically, if it's Thursday, it's Butters, but we did that yesterday.
No, we literally
Love
changed
Butters.
that like
No, I know.
months ago.
I just
We
like
changed
saying
that like a year ago when we launched.
And listen,
Market
I know
Matrix
that
guy.
people out there say, "Oh, the Yankees lost." You know, Yankees lost.
Yeah,
Dodgers were the better team.
You said that.
That's what happens.
And you don't get all disappointed.
No, I don't get disappointed.
Yeah,
You know, this is what it is.
Yeah.
The rundown.
Let's do it.
Look at what Amanda did here. How cute is that? Tech earnings spook stocks, and then it says boo. That's adorable. Mind the gap. That's one of your sayings.
Lot of gaps in single names here.
We're going to preview Apple and Amazon, and we didn't get a chance to do Q&A yesterday. We will do it today, I promise. So let's take a look at things here, Dan.
Yeah, listen, a couple reports last night. I know you're on the fast money as it was all coming out. So you had Microsoft, you had Meta. We've been talking about these stories as two very different stories. Obviously, Microsoft relies on their investment in OpenAI to integrate it into a bunch of their products and services. They're one of the biggest resellers of OpenAI technology. They also have, obviously, Azure, the big data center business where like businesses come there, they rent the compute, they use the AI models on that. So deceleration in some of the growth there. It's something that I don't think was a huge surprise, guy. Maybe it came in a little lower than expected. If you looked at just how the Q2 was shaping up, like forward estimates came down a little bit. And then Meta, I'll just kind of lump them all in because Carter's going to go through all of the names. I mean, here's one that trades really well. It made a new, it broke out, made a new range. It's still in that range. I think you might have thought this would be a problem if it was breaking below that range. Let's see how it holds. But again, here's a company that is talking about the continue on the spend. And the big difference is they don't have the data center business. They don't have that. They don't have to worry about that. The investments they've made, and you made this point, and I'm going to let you make it again, it's like they've been putting it into their own ad serving business, and it's been good for them.
They're very good for them. If you look at some of the metrics in that quarter last night, it suggested that AI now for the second quarter in a row is working for them in margins and in ad revenue and all the different things. Number one, I think the concern about the stock was the spend. What I said last night is, and it's obviously not happening today, but I think they've proved that the spend is actually paying dividends, but I think the market is still in sell first, ask questions later with them. I get it. In terms of Microsoft, we've talked about this a number of times. Pull up a Microsoft chart. I mean, it topped out. You see it in July. We obviously had a little bit of a bounce yesterday into earnings, and now we're through the 150-day moving average. That's going to begin to slope lower. One would think the August low is absolutely in play. And as important as a company as Microsoft is, it's an expensive stock. I try to make that point over and over again. This is not an indictment of the company. It's an indictment on valuations, which is a point we've made hundreds of times. By the way, that's true for a lot of stocks. And then at some point, the market's going to take notice.
Yeah, and again, this is on investors. It's not on the company.
Yeah, I agree.
And when you think about one of the comments that I took away that I thought was really kind of curious, though, is that like they're basically talking about demand's really good, right, for in the Azure, but they don't have enough, capacity built out, which tells you you're going to continue to spend. And at some point, if demand slows down, then they're going to be in a period that most of these tech stocks were in 2020 into 2021, where they were just spending like drunken sailors, and then 2022 was a big digestion period, and people people forget this guy. I mean, if you just do it like Netflix, Nvidia, Tesla, and Meta, they all sold off 70% from their highs in 21 to their lows in 22, and no one thinks that could happen again, but whatever.
Let's take a quick look at the S&P. Yeah, and I agree with you, by the way. Nobody ever thinks it can happen until it happens. And super micro is a great example of what can happen, and we've had that conversation. But this S&P chart, look, very short-term uptrend since the August low. I get it. Maybe it's not that important. I'm sure Carter can opine, but whatever it's worth, we have broken that. And one would think the next logical place is the 150-day moving average, because if you then draw a trend line from last fall connected to the August low, the third point of that trend line is going to come in right around that 150 days. So we'll see. But today sets in motion, I think those things potentially could happen. Understanding that with month end, a lot of strange things can happen into the close.
Yeah, 5450 is that 150 day. And I'll just say one thing before we get to Carter. You've been saying this, and I think folks are like kind of scratching their heads. You've been saying this, and the VIX, let's just pull it up here. So you've had a series of higher lows, right? And again, you also had a series since that like crazy early August period, which we know was a bit of a fugazi. You've also seen lower highs, right? So it's just a tiny little pennant here. So it'd be interesting to say if we saw follow through. We're going to preview Apple. We're going to preview Amazon later on this thing. If you saw follow through in this weakness, you get a VIX that's probably north of 25 guy, and then not so distant.
That's what I thought for a while. It has not been playing out. I mean, obviously August now is a long time ago, but I thought that was sort of the tremor, and I think there's still another tremor or another main event yet to come. I don't know necessarily if the VIX gets back to those levels that we saw, but the market, I think the reaction could be a lot longer in the tooth in terms of not a 1 or 2 day event. Maybe you see vol elevated for an extended period of time. A lot coming up, obviously, with the election and stuff. So we will see, Dan.
Yeah, no doubt. All right, let's bring him in. Carter Braxton Worth of Worth Charting. He put a note out that he's going to preview for us right now. And listen, you know where to get this. You want to get his work in your inbox? Yeah, just go to worthcharting.com. Yeah. What is it? What's the tagline there?
It's nothing fugazi. It's just charts.
Just charts. Carter Braxton Worth.
How are you guys?
I don't know if you're not going to put the fugazi word in there, but it's just great work.
Nothing, no guides. This chart's not hearts or something. No emojis.
Yeah. Oh, yeah.
No emojis, no hearts. Just charts.
There it is. There it is.
And then if you had, what's the woman that I like that sings? Britney.
Britney Spears.
Like if she was your spokesperson, she would say, she'd sing it.
Yeah.
No emojis, no hearts, just charts.
Yeah.
Bitch is what she'd say.
So
that's what she'd say.
So Carter wants to get in and out of here, and I'm going to tell you why. He's got he's got a couple little ones. It's probably going to be
my bad. That's right. Halloween.
A pretty active day on Halloween, and without docs. Can I say this about, I'm not going to say the address, but we're going to say that Carter lives in a building with another very good friend of ours.
Yeah, Melissa Lee.
Okay. So we're not doxing anyone. We're not going to put the address out there.
Have we talked about it in the past?
So will you go to Melissa's apartment with the kids and say trick or treat and vice versa? Is that going to happen today?
There can be some overlap. We were talking about it when we were riding back from the NASDAQ studio just a couple days ago. But yeah, we have some in the same general vicinity of age.
I love it. All right, Carter, you put a note out just now, and it's perfect timing because, again, we know that, a few of these names, they don't always go in the same direction. And you make that point, you know what I mean, with the Mag7. But sometimes there's just a kind of through line as far as the fundamentals here, but you don't care about that. Let's talk about the charts because you've been doing some great work on these names as an aggregate, but let's talk about a little bit of what you're seeing there.
Sure. So I think the one thing to note is despite the very red tape at the aggregate level, some 180 stocks in the S&P are up. It's not one of those, 10 to 1 days. And so it begs the question, how could there be, call it 200 up, 300 down, because the market is so, as we all know, cap weighted and driven by just a handful of names. And those are the ones that are under real pressure. It's not just, of course, Magnificent Seven or tech. Eli Lilly peaked in the second week of July, the same exact week that Magnificent Seven peaked, the QQQ peaked. So they're darling stocks, even outside of tech, that have all slipped. But let's look at some charts if we have them. And
we do.
This is the title of this note to clients was Sloppy and Getting Sloppier. So July 11 to August 11, August, September 11, September, October 11. We're almost November 1st. Not one of those aggregates has made a new high since July. And the S&P, which of course is at risk of giving it back. We're only a mere 1.6% above. But let's look at the visuals rather than in tabular form. So the Magnificent Seven, of course, you can depict the situation that way. We can keep going. We can, and the issues, are we going to break a trend here? You look at that. We got another iteration, I believe. How far down? Final chart. I think we break. There's some arrows possibly, and why perfectly reasonable to get down to that well-defined uptrend line in effect over the past 18 months, 2 years. So, yeah. Buy, sell, or hold. I guess it gets down to that at any given time. Retain your long, or reduce it if you're long, or short it, and I would reduce exposure. Hedge, sell calls, buy a risk reversal. And with new money, I'd rather be short than long this particular thing.
Yeah, listen, totally with you. Here's my question to you, because I'm sure people will ask. Obviously, the longer duration between the tops, the more important the chart is, I would imagine. And I guess the optimist will say, well, this was just July till now. It looks like a double top. Yeah, but the duration's not enough to get me convinced. Does that make any sense, or does that not hold much water?
Well, long-term tops can be 20 years apart. Silver had the Hunt Brothers top in the 1980s, and it topped again in like 2011. But this is a well-defined double top that has, several months between it, and the implications are it's not a major double top, but it's an important intermediate double top, and lower from here, I think, is the right bet.
Carter, let's just talk a little bit about what we've seen this week. So Google out of the gate had that big gap. Maybe Amanda can pull that up really quickly. And it gave most of it back yesterday.
Mm-hmm.
I know you hate that sort of action, right? It kind of basically opened near the high, up 5 or so %, closed on the low. And here we are. We followed through into today and filling in that whole gap. The news seemed okay, like better than okay in that one, guy, when we were kind of parsing through it Tuesday after the close. Talk to us a little bit about that underperformance off the July high. You have that gap on news, and it fills the whole thing in.
Yeah, I'm a buyer with new money. I'd be small nibbles here, especially if you fill the gap. The strength is important, and it's idiosyncratic. The weakness is market related.
So, Guy, if we get out of this week, and this was the only one that had particularly good news on the cloud, front, on the hyperscaler front, do you agree with his take from a fundamental standpoint? Because I see what you see. It kind of, maybe it's a market sort of thing that it pulled back on, and probably reload if you like the quarter.
I think that's exactly right. I mean, quite frankly, technically, thought it was going to get to one. I thought it would get to the July high. I said it the other night on the show, and I still think that's possible. Maybe the best thing that can happen actually is we fill this gap that we created with that gap higher, and then it gives it some sort of runway. I guess what you have to look at is the holding of the 150-day moving average, which is probably a few dollars away. But, again, I think Google is, I don't want to say it's defensive, but I think it's one, at least valuation-wise. And listen, understanding that their moat is not as wide as it used to be, I think they still have one. I think this quarter basically illustrated that. This is one that I've said it for a while. Google and Facebook are the two that actually make the most sense to me.
Yeah, it's funny. Danny Moses just hits us in our chat saying that Zuckerberg just filed to sell $1.3 billion worth of stock. It's
all these people have been selling stock hand over fist.
It's kind of a rounding error, if it's part of a pre-established plan or whatever. So kind of interesting. Carter, just really quickly before we let you go, Apple tonight after the close, a 3.5% implied move. I mean, this chart, it looks constructive, right? Is that fair to say when you look at this thing? It had that big move up from June. It's consolidated there. People are very excited about the potential for an upgrade cycle based on what they're doing at generative AI on the device here. Thoughts on this one into the print?
Yeah. So in this instance, it's all about its relative performance compared to all of its other brethren, meaning these super cap marquee magnificent names. And so because of that, and I suspect, I can't speak to this, but you certainly can, I expect they've got more cash than all the others. They happen to have a fairly prominent investor. I think Buffett's big in this name, right? There are things that make it more stable, perhaps. And so all of that considered, I would rather have Apple than the others that are acting so very poorly. Yeah, I'd rather have this. There's a pair. I'd rather make this long and short the Qs.
Let's take a quick look at Amazon CBW and your thoughts on this one. I'm always, if you go longer term, you'll see, I mean, Amazon implied move up or down 6%. And I think it's a bit of a coin flip here. They can pretty much do what they want. And if you go back and look over the last few years, there's no real rhyme or reason in terms of the way the stock reacts to earnings. I mean, they basically, if they want to pull a margin lever, they can. If they don't, they don't. And the stock acts in kind. So I'm not quite convinced what to do here.
Pair of twos. I mean, it is. That's the point, right? When we're trying to wait for clearly defined opportunities, moments where, wow, this setup, we've seen it before. We've seen it hundreds of times. Make the bet that it will play out and get resolved as precedent would suggest. And while they're not infallible, sometimes they do the exact opposite of what this chart setup is. This is a non-setup. It's a pair of twos. So why make the bet?
Yeah. All right, man. We really appreciate it. We know it's a very busy day for you. Thanks, Carter Braxton Worth of Worth Charting.
Okay.
You know, Carter's one of these guys, by the way. I know he's got to go, but he can stick around.
Yeah.
Oh, he's gone.
Yeah.
He'll go through the kid's candy bag and he'll pluck
what is he taking out?
And he'll pluck what he
Butterfingers?
want.
Butterfingers. What's really?
Yeah,
what do you pluck? What did you used to pluck out of the kids' bags?
I'm a big Twix person.
Really?
Love the Twix.
You know,
I like the left.
You know, they sell the Twix at any bodega or 7-Eleven, so you can have one whenever you want. You don't have to steal bodega. You don't have to steal kids.
You know, I would submit that Halloween candy for some reason just tastes better.
Yeah, it does.
I like Milk Duds.
You know, they've been having them out here in our lobby.
The Milk Duds?
Bill and I did a taste test because they also had Rolos.
Rolos suck.
Why? No, Rolos infinitely better caramel chocolate candy.
I mean, they look good, but Rolos typically are stale as shit.
So you like the
nobody
Twix
buys
because it's caramel and chocolate on top of a cookie.
Yeah, yes.
I know.
And there's a crunch to it.
It is a crunch.
I like when you can freeze that shit.
Yeah.
And I'm sorry, Amanda. I am sorry.
It's Halloween.
But
you can go
the not the Kit Kats. The Kit Kats.
Yeah.
The ones in London, the chocolate is different.
Yeah.
That's a much better Kit Kat.
Yeah.
So if anybody over there is from the UK, United Kingdom, and they want to bring over the Kit Kats from the UK, by all means.
So, by the way, Japan, they have crazy flavors of Kit Kats. You can Google that. No, I know. It's not great.
Why? I mean,
all right, let's do this.
Why do people have
let's
to
do this
really
quickly?
They screw up a good thing.
Know,
yeah, let's do it.
Well, so hold on a second. So Carter's charts on the Mag7.
Yeah, it's
fascinating.
It looks scary.
We just pulled up two charts. Okay, let's just go back to our Apple chart first. Okay. And we're going to do Amazon too, but they look kind of constructive. You know what I'm saying? Like,
that's fine.
Like, do you agree those consolidations after breakouts?
Fair enough.
Yeah.
Let's look at another chart. QRVO.
Okay.
Cuervo.
Okay.
Which was, I think, the amalgam of RF micro devices and TriQuint. They jammed them together and they created that. I mean, that's good.
They merged that crap.
This is an Apple. You know this better than I do.
Yeah.
I mean, this is an Apple supplier.
Yeah.
Look at this stock.
Yeah.
Look at what they just said. And this is off of what's been a ridiculously poor couple of years. So I look at this and say, all right, maybe they're trying to tell us something. I mean, the market clearly doesn't want to pay attention, although Apple did sell off a little bit yesterday, I think, on the back of it. But you are at huge support here at $70 or so. You can go back to 2020, I think, this spring.
Yeah. And
you'll see what I'm talking about. So I look at this and say, where there's smoke, there's fire.
Yeah, it's interesting. So 46% of Cuervo's revenue is from Apple. You know, listen, it totally, they don't name their, you know what I mean? Their suppliers. But I know they're back into it. No. It's you know what? It's a really good point.
But listen, I've heard Jim Cramer talk about. I mean, other people are not as exercised as I am.
Yeah.
So we're obviously going to know a lot more in a few hours.
Yeah. So here's my quick take on Apple, and I've been kind of steadfast on this. June 10th, when they announced Apple Intelligence, I said, to use the term again, it was a big fugazi. I mean, there was nothing there. There was no
two fugazis in one.
No, show. I know, but I think what it did is and Carter just mentioned it too. I think Buffett sold half his stake. If you go back, can we pull up Apple on a 2-year basis? I mean, this stock massively underperformed all its mega cap tech peers. Buffett was selling it. Look at that middle of the chart. That was after WWDC. So look at that guy. So the way I look at this name is like, they're not going to get the upgrade cycle in this quarter or be able to guide to it. And so you tell me, like, valuation, and you talk about growth. iPhone's been growing at low single digits percentage. If that doesn't come in 2025, you don't have this super cycle, whatever, then I think the stock's way too expensive.
Agreed. People will say, they'll push back on me and say, Guy, you know what? You're looking at Buffett. He's selling it because there's a portfolio management thing. It probably got to be an outside position based on the stock appreciation. So he was just doing what he would do for any company. I don't think, and I'm just saying this, I don't know if it's necessarily an indictment as opposed to a Bank of America, which he's been paring down, because I think it's more of an indictment. We shall see. But the implied move here in Apple is somewhat muted. I mean, 3.5% up or down.
Actually kind of surprising.
I would think it'd be more given where we are.
I think it's one of those scenarios. If all of a sudden, I do believe that expectations are not particularly high, and if they were to give guidance,
it's interesting you say that. I mean, I think expectations are very high. I mean, if you listen to Gene Munster talk, I mean, he talked about this, super cycle, and maybe it's not this quarter, but I think a lot of people are putting a lot of stock into what they're going to say, and I do think it's going to be listen, it's an expensive stock. And I've said this 1,000 times. When it was a growth company, it was trading at a value company valuation. Now that it's a value company, theoretically, it's trading at a growth multiple. Something doesn't make sense. So I'm not saying it should trade necessarily at a market multiple, but I don't think it's worthy of probably, I don't know, what is it you have in front of it? 29.5 times?
Yeah, so you're looking at EPS growth that maybe is 11% next year, maybe sales growth 8%, trades at like 31.
Oh, 31. So it's even more so.
Yeah, listen, the one thing I'll say, and Gene's articulated this very well on Fast Money and on the pod, he was on OK Computer with me a couple weeks ago. I mean, he nailed the breakout move.
100%.
Like nailed it. And so now his take is like, yes, he expects there to be an upgrade cycle that's better than expected, better than kind of trend over the last few years. But also when you start getting app developers building on top of this, AI technology that's going to be in the phone, that's a higher, it basically grows services, higher margin business.
Services business. And that's going to be interesting, right? So I think last quarter, services were north of 25% of overall revenue. Which is encouraging. And that's why you can make the justification for a premium multiple. It would be even more encouraging if that continued to grow off a revenue that was growing at a faster pace. So if services grew and it grew commensurate with revenue, and now you're 26, 27, and you say, oh, wait a second, maybe there's something here. I don't think you're going to see that, though.
Yeah, no, and I guess the expansion of their installed base, I think there's like 1.5 billion iOS devices out there. So if you continue to grow that, you continue to grow, services, as a percentage of that, higher margin.
All makes sense.
That's how you get into better margins. Let's just look at Amazon for a second. Oh, I want to say one other thing. I've been saying this for months. I think Apple's advertising for this new phone has been totally disingenuous. When this thing was sold, when it started being sold in late September, and the way they kind of previewed it in early September, Apple Intelligence, all the ads on TV, there's nothing intelligent about it in the phone. I have the 16. I didn't get the Pro, and I did the upgrade last week. You know what I mean? For this out, there's nothing there. I mean, like that. So
agreed.
So should there be like class action suits?
So why should Apple be any different than literally anything else that goes on in this country? I mean, it's in terms of disingenuous and false advertising. I mean, everybody's guilty of it. I mean, I'm not an Apple fan.
No,
I'm not an apologist, but you're right.
That what OpenAI, for instance, what they shipped, if that's a one product thing and it sucked, and you're paying $20 a month for it or whatever. I mean, it's apples to oranges is my point, but Apple's supposed to be integrating their technology, and right now OpenAI has a much better product. The last thing I'll say about, there was a headline today in OpenAI that they're actually giving more search functionality within their app, which is going to actually pressure Google. I thought that was really interesting. All right, Amazon, really quickly, guy. So if Azure is a bit of a problem for Microsoft here, AWS, which is the market leader, right? This is the one that has some risk. I'll just say this. That chart looks constructive to me too. So that gap, 3 months ago was on earnings, disappointing, filled it in pretty quickly. And then, so tell me what you see here and what you're expecting.
If you're asking me to choose, which you are, I look at this and say, you know what, there's more downside risk to upside risk. But if I didn't have to choose, excuse me, I would just stay away from this. I think it's a no touch here. I think there's a reasonable chance we sort of back and fill to the 150-day moving average is my instinct. You're right. We created that gap to the downside that was immediately filled in. We're trading at those previous highs we saw in July, as Carter outlined. I mean, I don't know. If it breaks out, then you know what? I missed it like I missed most things. Otherwise, I think this thing pulls back.
Yeah, you highlighted this on a few occasions, that Walmart. Pull up Walmart for a second, because if you took the name Walmart off of it, you'd think it's like a generative AI play over the last year and a half or so. And so I think you highlighted on the desk that night when their earnings were out that e-commerce business was accelerating. I think it was like up a few percent year over year, 21%. They're talking about how they're using generative AI. It's helping them get better efficiencies and the like here. So I have to assume that Amazon, which has spent so much money investing in machine learning and AI and generative AI, that they're going to see some of the benefits in their e-commerce business. And if AWS can just hold serve and they can talk about how they're, gaining share and folks are coming to their cloud to use these things. I mean, that's how I see those two things. You get this stock making a new high.
No,
that's
fair.
That's my
I think that's right.
I don't know if it's going to happen. I'm saying like that's the setup.
And we'll see how it plays out. I mean, theoretically, they should be in a great position right now to sort of take advantage of all that. Well, we'll see. There are other names we want to look at real quick. And I think, look, Uber, which it's funny, we had a thing on Fast Money the other night, and it was the most important chart or something. And I mentioned the transports, and I did it because I wanted you to make fun of me, which you did. And Uber is, I think, the biggest component of the IYT. I think it's the 3 U's: Uber, United Parcel Services, UPS, and United Airlines. Okay, or no, Union Pacific. Excuse me. So those 3. But if you pull up an IYT chart real quick, Amanda, you'll see that we traded up the previous highs, and with this Uber move, it's seemingly rolling over as well. So I'm not suggesting the transports are as important as they were, 40 something years ago, but I do think they still have some level of importance in terms of what the economy is saying. Needed to look at a longer term chart in the IYT. So we have an Uber chart. We've broken that uptrend line. We're going to basically, looks like we're going to hold the moving average here. What are your thoughts on Uber? And that's what I'm talking about in terms of the tops.
Yeah, so there's the IYT. Let's go back to Uber for a second. And this is the mind the gap section of the rundown here, Guy. So you had that really nice uptrend. Obviously, like a lot of stocks, it kind of sold off hard in that August low. One of the things that was kind of, I thought, interesting because it topped out in the spring. Okay. And it had a much steadier decline over like 3 or 4 months into that crescendo here. You see it. It had that, fake out of the breakout, and then you see this breakdown, and it's right at that moving average. I want to take you to a couple things that they said, and I think it's kind of worth noting. I mean, they're really talking about some consumer weakness, right, in the ride-hailing business and also in the delivery business. This is one thing. So that we've said on numerous occasions, though, there's a lot of competition here. The unit economics for some of their some of their competitors are much more difficult than them because they don't have the scale that Uber does. So maybe there's a pricing issue here. Maybe there's like an emerging price war or something like that. But this is a really interesting one. I was a lot more constructive on this name, and this move kind of surprises me, but it also speaks to how crowded some of these trades are.
Agreed. And I think you say what you want. I mean, Uber is somewhat economically sensitive.
100%.
I mean, 100%.
Yeah.
So that's why I brought up the IYT. Doug Cass is just texting us or emailing, and he's saying the permables are dismissing the Buffett indicator, and he's right. I mean, we talk about it all the time.
Tell us what the Buffett
said he hit
indicator
his
is.
October high and hit the high on October 16th, 2024, which is a couple of weeks ago. It's basically the Wilshire 5,000, which is all investable stocks here in the United States, divided by the U.S. GDP, which is probably $28 trillion or so. And we just went through 200%. Wow. And I think his being Buffett, his antenna comes up about 125, 130%. And Doug points out there's a reason why he's selling his Apple and his Bank of America. 100% agree. I made the differentiation between Apple and Bank of America because I do think Apple is more positioning. He's just basically readjusting the positioning. And I think Bank of America is an indictment on what he thinks going on in the market. Regardless, he's right to point out that nobody's talking about it. I mean, we try to point it out. When the market goes up every day, nobody wants to hear it, but it doesn't mean it doesn't exist.
Yeah, by the way, Doug is prolific. He has this series on NVIDIA. I think he's written on it 40 times in the last year at thestreetpro.com. You got to check it out. I mean, like every day there's just a barrage, and I don't mean like that in a negative manner. He's talking about the things that matter most. He sent something to us, a tweet this morning, and I know this is something that Doug has written a lot about. It's the equity premium here. Look at this from Holger. I can't say his last name, but I know he's pretty good on the Twitter. It seems the stock markets haven't yet recognized the equity risk premium, have turned negative. The yield on the 10-year U.S. is now higher than that of the earnings yield of the S&P 500. Doug talks about it a lot. Guy, when you look at a piece of data like this, you just see headwind, especially in an environment where rates are likely to stay higher for longer. That's been your call on rates here. Talk to me, especially like, hey, listen, if the equity, if S&P has a tougher time, you know what I mean, and the yield goes even lower, I mean, that makes it that much worse, I think.
Nobody sees this stuff. Again, nobody wants to acknowledge stuff until ex post facto, after the fact, that everybody go back and look, oh, yeah, it made sense. But when people are trying to point it out in real time, nobody wants to hear it. They're very dismissive, because when the market goes up every single day, that's what, that is their truth. So when I say price is truth, it's not to be glib. It's because people make their decisions based on where things are trading. I mean, it's just that simple. With all that said, you add this on top of a multitude of metrics that are flashing red, and yeah, the market's not paying attention. Now, I guess the good news today is, if you want to glean anything, TLT is actually higher, which makes a little bit of sense. We've talked about this. We had Katie Stockton on Fast Money last week. She thought in the short term yields had stopped going higher and can do a bit of a back and fill. Today's actions suggest maybe that's the case. And if you're looking, we actually opened the day lower.
Yeah.
We're trading a little bit higher here, but I will continue to say any rally in the TLT is going to be sold. And if you want to sort of brunt it out, Amanda, and I'll put myself on the line, I think TLT trades back down to those lows that we saw in the fall. So that means what? 10-year yields go back to 5%? Yeah, maybe. I don't think anybody is pricing that in. And I think there's I don't want to say likelihood, but I think there's a decent chance that happens.
Yeah. Before we get to a couple questions, we got to follow up on something we talked about yesterday with the super micro, right? So we were highlighting the fact that their auditor, just said, I'm out. This was yesterday. The stock was down, I don't know, like close to 30% or so. So here it is again today, the follow through. And you mentioned this, and I didn't know the number. I thought it was maybe 5.
I thought it was 9%. It's actually 11%.
Yeah, and the third largest customer of NVIDIA. And we did highlight the fact that we were reading, I can't remember where it was, but some article was saying that the CEO, long-term CEO of Supermicro, I think his name is Charles Liang, Liang, for those who know how to pronounce. I do not. But then Jensen Huang, CEO of NVIDIA, have had a 30-year relationship. So when you think about like Fugazi, there it is.
Three times.
It's a charm. Like that sort of accounting in this company just getting absolutely, like they're taking this one to the woodshed, and they're not going to stop. You know what I mean?
They should. The market should. This should be, again, I'm not saying you should short this stock. I'm not saying, but if you think about it, I mean, if put up a super micro chart long term, and again, this is one that we got fricasseed for in the spring, because I remember feeling you don't know what you're talking about. You're missing it, AI super, all this bullshit, and it got put in the S&P. I want to say on March 8th was the announcement.
Right. I
think the stock made an all-time high within a week of about 122 or so. It made. And any metric you look at, it made 0 sense whatsoever. And now you're round tripping the whole thing. So even here at current prices, I mean, theoretically, this thing should be back where it was last year, around somewhere between $10 and $15. But to your point, which I think is a broader point, where there's smoke, at some point there's absolute fire. And they're the third largest, even if it's the fourth largest customer of NVIDIA, it's meaningful. And then if you think about what Ernst & Young, I mean, the language that they use to step away is about as strong a language as you will see out of one of these auditors, without question. Nobody's going to come in and pick this up and they're going to what's going to wind up happening? They're going to get taken out of the S&P 500. And maybe potentially delist. Who knows what's going to happen, because they can't file and all these different things. With all that said, you talked about class action. Think about what happens when a company gets put in the S&P 500. All these different funds they have to buy right? It's part of the mandate. I mean, where was S&P? You would think they would be rigorous in their work. And we'll talk about this on the podcast, so I don't get ahead of myself. But S&P is liable at some point as well. I mean, where was the rigor for them?
Let me just make one point about Supermicro's revenues here. So this is on a calendar year basis. In 2022, they did $6.6 billion in revenue. 23, they did 9.2. 2024, this is the important part, 22.4 billion, expected to do 30 billion next year. So let's just look at this in NVIDIA. Okay, so again, this is the third largest customer of NVIDIA. In 2022, NVIDIA did 27.5 billion, 55.5 billion in 23, 121, and then next year is supposed to get ramped to 175. If you have companies like Supermicro, big companies like that, who've been playing accounting games, you know what I mean? Then that means there's some goofy stuff in some of the big products that they've been buying, right? NVIDIA's chips go into their servers that go into the data centers.
I don't want to. We're not saying anything about. We're only trying to connect some dots.
But my point is I know no connection between what NVIDIA and SMCI. But if their revenue, if their purchasing goes away from NVIDIA,
I agree with you.
That's my only point.
100%. I mean, I've thought I thought there's some things to be curious and concerned about with NVIDIA for quite some time. The market sees it completely differently, but I'm telling you, you can almost see it, within early next year, people say, well, that SMCI should have been a warning sign for NVIDIA.
Well, so I want to make one last point here. So NVIDIA has a very active venture arm. They've been investing in startup companies, okay, that are buying their GPUs. So think about that, right? So OpenAI, okay, when Microsoft invested in OpenAI, a big part of that wasn't just dollars, it was credits to their Azure, to their cloud. So there's a lot of what you would call maybe close to vendor financing that's going on here. We saw that
we've heard that before.
Yeah. So I don't know, like that's the sort of thing. I think your point that you make about Supermicro is there's going to be a lot that comes out here that might be very instructive about how closely related a lot of these companies in this ecosystem are.
I think we would not be doing what we believe our job to be if we didn't point this stuff out. Now people can say, you know what, you guys, you're off your rockers. NVIDIA, it's some new paradigm, and this is different. Okay, that's fine. And you can trade accordingly, or you can say, you know what, maybe these two bird brains are onto something. Nobody's seemingly talking about it. By the time everybody starts talking about it, it may be too late. Is it time for questions?
Yeah, it is.
Who believes Apple tanks earnings and drags the market down some more? That's from Vane H.
You do.
I'll raise my hand on that one, Vane, because yeah, I think there's a really good chance. I mean, Dan said he didn't think that much was priced in. I'll take the other side. I think people are really optimistic about this, so we'll see. I'm not that optimistic about what Apple's going to say.
I guess. Listen, I'm not. What I'm saying is that like this is a company that is they are like laser focused on what they say to the street and stuff like that. And so when I say like maybe I'm not expecting much. Do you understand what I mean? Like, and I know that there's a lot of the true believers that they buy on every dip in this story, but I do believe that it's a couple quarters away when this product actually is embedded into these hardware devices. But here's the risk. If it's 6 months before the reviews, like people kind of see that this is going to be a great product, then people are going to hold off on buying the 16
100%.
and they're going to wait until the 17 is introduced. And, first things first, in June, they're going to basically have their developers forum and they're going to show you what the promise was in 2000, like last June and what it is right now. And then I think that the device that is going to be upgraded will probably have a new form factor. And that's when you get the big upgrade cycle.
And you say 1 or 2 quarters. I think you can be talking about this time next year, but we're going to find out. Yeah. So yesterday, Josh Brower asked, and we probably don't have the question, but I'll read it. Guy, can we get a take on the miners' earnings coming up? Record highs in gold, silver, lower oil prices should be record profits. Yes, I agree. He bought Agnico Eagle Mines, which is down about 2% today. Gold is down today as well. If you look at AEM, I mean, this stock has been on autopilot. That's the good news. I guess the bad news, if there is any, we're trading at the levels of Manning can pull up a chart. Longer term, this is where we sort of topped out back in the fall of 2020 or so. So, I always talk about double tops. I can't then just sort of cherry pick and not point this out. Yeah, this is a little bit concerning to me. So I give it a couple days. I still think gold's going much higher, and I think these mining stocks are underloved, and I think not every mining stock is created equal, as we can see from this chart. Remember this picture. Now, Amanda, pull up a new mining chart over the same period of time. You'll see a completely different story, and that just speaks to one company's better than the other. And I think that's why I picked Agnico Eagle Mines to be the A in my what, Dan?
Your clan.
Correct.
Yeah.
So that's my take on that. Another question. We addressed Uber, but we have a couple of people asking the question about Uber. It's from Chris E, and it's from Tenzin. Tenzin asked, you guys see any recovery in Uber in a week? And then Chris said, guys, I want to go big into Uber. What's the chart telling you? So, again, we'll throw the chart up real quick. We mentioned that we're right back to the 150-day moving average. It's going to be a big volume day today in Uber. So maybe this is sort of your capitulation day. I think that might, in fact, be the case. Other people say we're breaking down here, but at least you have something to trade against, Dan.
Yeah, I mean, listen, there's from a valuation standpoint, if you just look at 2025, it trades at about 30 times. Revenues are expected to grow mid-teens, and then EPS is kind of inflecting here. Like you're expected to see growth off a low base here of 84%, decelerates to 33% in 2026. So again, I think that this is like, they are the one in the space. There's really no competition. Obviously, as the mix shift changes from, ride hailing to delivery. I mean, they have a lot more competition on that front, but it's a company that, has 40% gross margins or something like that. So I don't know how you improve those dramatically. You know what I mean? Like maybe there's some efficiency, maybe there's some stuff as it relates to, autonomous ride hailing, but that's like years out.
All right. And real quick. So Uber's already traded about 40 million shares. It typically trades 15, which if I'm sort of back of the envelope, probably trades close to 5 times normal volume today. So maybe it's a bit of a capitulation. Give it time. Wavy McFly, can Guy please expand on what he sees as suspicious in NVIDIA? I mean, I think we sort of outlined it a little bit, but I just think there's, you talk about it. This happened back in the late 90s and stuff when the ordering and how things are accounted for and the pull forward, it just doesn't make a lot of sense to me. And then I'll say this, when you look at a company that's trading at a reasonable valuation on price to earnings and then look at it at price or revenue to price to revenue, and it doesn't make sense, like the two are mutually exclusive, that's because margins are ridiculous, 77%. So at some point, something's got to give. I don't think you can look at this at a price to earnings. I think you got to look at their margins and say, okay, there's going to be some degradation along the way. And almost by definition, that's going to hurt earnings. And there's no way that the revenue growth can continue on the trajectory that it is. So a company that's trading maybe at its peak a day or so ago, 21 times revenue, which is a little less now with the sell-off. I mean, that number should be more like 8 historically.
So the point about the connection between Supermicro is we talked about the step up that Supermicro was seeing in revenues. Now, if that's a bit of a, there's some issues there, we just said it, this year, NVIDIA is supposed to do $125 billion in revenues going up to maybe 180 or so next year. And that just can't, like that's if the customers are going by the wayside, if there's less demand for the compute. And that's why I think this period, and we talked about it last week as we headed into it, if 30 or 40%, and now if we add SMCI, 50% of NVIDIA's sales come from Microsoft, Amazon, Google, Meta, and Supermicro. If there's just a little bit of a slowdown, and how do you get to a slowdown in the spend? Well, when you see revenue deceleration, like we just saw last night, that Microsoft and Meta they didn't speak to it. It was just in their numbers.
That's
so
right.
If that continues to slow down, then NVIDIA is literally at the tip of the spear of this.
We're going to find out.
Yeah.
That's it for me.
Yeah, we're done. I think.
By the way, Monday,
yeah,
we're going to have market call.
Yeah.
We're going to start
a lot of Q&A. So people tune in on Mondays.
Yeah.
It's going to be Guy and I. We're going to get into like some really deep previews for the week, and then we're going to take a bunch of questions and we're going to set it up for, Tuesday is going to be a day that we really dig into some options trades. So that's going to be fun. We have some new technology that we're using on that front that we think is really cool. Liz is going to join us on Wednesday. That would be EYT from SoFi. And then on Thursdays, once again, we're going to have the great Carter Braxton Worth.
So weeks are going to get busy again. Yeah. That's number one. Market Matrix, which
how many years are we in? Yeah.
25.
Guys, enjoy it. I'm going to tell you this because a lot of times Guy and I are running out right before the close, and we haven't collected all of our thoughts as we're heading up to do the Fast Money show. If you bang on your iPhone this Market Matrix in like 7 minutes, you're going to get a really impressive rundown of what happened during the day, some of the biggest stories that you should be focused on. So download it in your favorite podcast store, rate it, review it, share it with people. That's how they find it, Guy.
YouTube channel. As we've said,
92 and change,
almost 93. We're trying to get to 100K.
Yeah,
tomorrow's November 1st.
Correct.
November, December.
Yeah.
That means there are 2 months left.
Yep.
So
let's do it, people.
Get off your asses. Am I allowed to say that?
Sure.
Man, it gets mad at me.
Right.
Like, this is my Halloween tie, as I mentioned.
Boo.
The scary duck tie.
Boo.
Bill Hockman is here. Bill was making fun of me earlier about Ranger hockey, and he's wearing some dopey hat.
Yeah.
But go see Bill. Where are you playing tonight? He's playing somewhere. He's not playing anywhere. He's giving me the cutoff sign.
He's like, he's out. He wants to eat lunch.
He's 5,000.
All right, people. Thanks so much. Guy Adami, FactSet, our fine sponsor here. Amanda, Jacob, that would also be Bill, and Timmy. Timmy's just killing it too. All right. Thanks, everybody. We'll see you Monday.